Hey, this is Mac with PriceActionTradingSystem.com, and today is Wednesday, October the 16th. We had a fairly decent uptrend today, so it was a nice chance to make some money. Um, it was fairly straightforward. It was really, it really was kind of a wedge pattern. And you notice I drew this line across the top here, and you can see as each time we came across that top, prices turned and went back and went lower. We may have even could have looked at this either way. Even if you had the channel here, you might have done your channel like this right here, and you can see that kind of held prices too, and that might have been the channel, but we still had this wedge type pattern, and you can see every time we touched this line, prices reacted off of it. So either way you did it, you probably could have come out the same. And even if you use these over here, you can see we're not quite getting there, so it tells you something. So at least you have to try to move it down, and if you move it down where it just kind of holds all those stems up through there, and you can see that's where we finally turned off the high, and you notice, and I'm thinking that's probably real close as well, because notice how we didn't touch here and we went lower, but we didn't touch here and we went up, and we finally touched before. And that's generally, you can see that. Well, we actually touched here and didn't quite make it back either. But generally, once you touch the line, you're going to come back to the other side. And so I believe that either one of those would have worked. And that just goes to show you that you don't always have to get the line exactly right. As long as you get it close, it should keep you in the same ballpark. And you could have even looked at it like this. If you drew it off these lows, you can see we were really coming right up through here. We had a break of the trend line, then a couple of legs up to a new high, and it sold off. So you could have had it that way. Again, it's still a wedge type pattern, so you don't always have to get this. And you could have even come off of this line up through here, and you kind of get the same thing you would have had down here. You get your break of the trend line here, then a couple legs up to a new high, and then a correction. So, but I believe this was the proper line right here, or the proper wedge right here. And we finally had the break below this trend line. We had a little bit of correction, and then we moved to a new high. And we actually had an overshoot right here too, and that usually leads to an extended correction or a break of the trend line. And you can see we finally got that break. We came back and tested this breakout area, found support right here, and then went higher. And there was actually a long in here that I didn't mark. I was actually, go ahead and put it on there. You could have entered here, but definitely probably right there. So we'll draw that one on there. But let's talk about the trades. And let me show you this too. Here's the first move up and then your correction. And so we were looking for a measured move, and you can see that is about exactly where we went to. And you notice that's where notice there's some stems up there, but there's no closes. The closes went right to that point, I mean to the tick. So it was a pretty good target area, and that's what I was using for my target area, and it worked out really, really well. Get that back off there so it's not in the way. Get that out of the way as well. Okay, let's talk about the trades. The market opened right in here somewhere. Yep, right in here along this low. And we finally broke lower. We tried to go higher. And you could have gone long here, but it's always best until you get a bar in your direction, which is right there. Green bar, and then you're way on up here, so it was better to wait. And then we had this little pull back here and then reversed, and look at that nice bar go long right there, and that got you long from almost the low of the morning, the regular open, and you could have ridden this all the way up because any runners would have been safe there, and you could have ridden this all the way up with a runner today and made some really good money. And generally you don't want to exit until you've either had an overshoot of the trend channel line or the trend or the upper trend line, or a break of a trend line and a move to a new high. So, and it's getting really risky after this overshoot, because sometimes you don't make a retest. So at the very least, you should have exited right in here if you didn't manage to ride this up. It was probably a good idea to enter on this double top with this trap right here, and I'll talk about that trade in a little bit. But that was your first entry, a great place to get in. And notice we tried to go lower once, we went up, tried to go lower twice, then had that little trap right there, or even right there, and we closed back inside that little trend line right there, and so it was off to the races from there. So that was a good place to enter. And then we had another chance to enter all right here. Obviously we got this little double bottom right here, and then we ran lower and immediately bounced. So you wanted to go long right there. That's a nice entry off a failed break lower, off a double bottom right at the EMA. Another easy move up. We only got a scalp out of that one, but you notice we hadn't come back to the trend line, and that's, you know, and you're probably going to come back to the trend line before you get a really good entry. Then you got another chance right here. Again, you got this double bottom area. We broke even a tick lower than the previous one, trapped everybody, turned up, kind of almost a repeat pattern there. So a chance to get long again right there. Another easy scalp, but you didn't get anything more than that. They came back and got the break even stops, but then you got another chance to get long right here. And I believe this is the one somebody asked me about. You know, when it's getting this close to the highs, it does get risky. But until you've had a break of the trend line, if you feel comfortable about your trend line and you've got a strong trend like this and you haven't reached your target, you just about have to take these, because if you don't, you get left behind. But here's something to look at. Notice how we broke higher above these tops, but see, this is, you got these three overlapping. This is congestion, and what happens when you break out of congestion? Let me make this bigger where everybody can see it. What happens when you break out of congestion? It almost always fails, even if only temporarily. And look what happened here. We broke out. It looked like it was going to go higher, and then all of a sudden it comes back. It fails, and it comes back. That's what happens, and you can see it happening even on a very small scale here. But it comes back and retests and then goes higher, and you got a lower high than this high, so that's a second entry long. And so that's worth taking right there. Look, it opened on its low and closed on its very high. So a chance to get in, and it is a little risky, so you got to be quick to get out. You probably want to keep your stop tight, but look how it never broke. Our prices never came back below any of those bars up through there until you got up here and made the high at the channel and then turned down. So, you know, if you don't feel comfortable with these, just get in and keep a tighter stop. You may get stopped out even if it goes higher, but at least you give yourself a chance on a strong trend day. And this is what strong trends look like a lot of times. Look at all these little tiny bars that just keep going higher and higher and higher, and that's generally, it doesn't look like it, but those are strong trends, and you got to be cognizant of them and give them the, you know, give them the due. Pay close attention to them and be aware of them, because they just keep going higher and higher until you eventually get some kind of reversal pattern. That's what I'm always, you know, people always ask me, is the trend over yet? Are we going down yet? You gotta wait, you gotta be patient and wait on the reversal pattern. And look, coming up through here, we had a failed break higher. Then it looked like we had a reversal, but we hadn't had any break of a trend line yet. This is just a, you know, we're just gathering strength to make the next run up. And then we make the next one. And finally, we overshoot the trend channel. And then notice how we come down here. And so that's a good clue not to try to get long again. And you could have gotten long right here because this touched the EMA, or the trend line and the EMA. And it would have gotten just enough to get 5 ticks or 6 ticks to scalp out, and then look what happened. It sold off pretty strongly. But your clue was this big overshoot right here. So that's what you're looking for when you're going long. So yeah, this was a good setup here, and this one was not as good. This one was very similar to this, but it's the same kind of thing. You just have to wait for a bar and notice it was right here, but it's so close to that channel. We've already had the overshoot, so it's a little bit risky going long right here because this one did not pull back to the trend line, but this one did. So that was the reason I liked this one over this one. And we hadn't had an overshoot yet. We had some little stems up there, but we didn't close above it and overshoot it like we did right here. So that's the reason I didn't mark this one. But if you took it, you see it still worked. And it generally will until you get a break of the trend line or until we get underneath the EMA and it starts holding beneath it. But even then, you're still looking for that retest. So look what happened. Let me back out and show you this. Look at that trend line all the way up through there. This was the first real close or break below the trend line, and they trapped everybody low and ran it to a new high. And that's exactly what our price action rules tell us it's going to happen. And when this thing's selling off like this and you look like you're going to make another leg down, it's hard to trust that. But that's what you got to do. You got to learn. You got to remember the trend is up. So we're looking for longs until we get a trend line break or a real strong overshoot and prices start trending down. And even if you'd have drawn you should have had your trend line on here, but it probably would have been something like that right there. And you'll see there's actually a little channel right here too. And look how we overshot that. And so that's another clue. We way overshot this and then had the trap, and look at that. So draw these trend lines, trend channel lines, and you know that's it right there because look how those two bars come right off of it. Then we overshot it, and you can see prices kind of reacting to that line on both sides down through there. So I'm pretty sure that was the correct line. And you can see when we got above it, it pulled back, tested, and then went higher. So draw your little, always put your trend lines on there because it will help you, no doubt about it. But let's talk about these last couple of trades here, and then we'll wrap it up. Notice that I drew these in green. These are iffy, but let me show you why I like both of these. Let me back out where you can see real good. Notice that we're at the top of the trend channel, and we got two matching highs, and both of them have a little stem on them, and we break above it. Both times, both of these trades, you just drop a limit order in right there, and it goes one tick against you, and then it comes down. And both of these were good enough. This one would have been good enough for maybe several points, depending on how you managed your stops. But we hadn't really had a break of the trend line. But we're getting close because look how narrow this is getting, and now we got two overshoots, and one of them is a real large overshoot. So that's a good sign that we're probably going to get some more correction here. But again, you got your two matching bars, prices ticked higher, then turned down. And both of those would have been easy scalps. And you wouldn't have got anything more than that out of either one of them if you moved your stop to break even, which is really the smart thing to do if you're not scalping out 100%. I usually, on these kind of trades, I would just scalp out 4 ticks and be done with it. Although occasionally you will catch the high of the day by, holding on to a runner here. So, but they're not a high probability trade, and that's why I mark them in green, because you're counter trend trading. And you really shouldn't take a counter trend trade until you've had a break of the trend line and then a retest. And that's what we got right here. And so now, if you get a reversal type pattern, now is when you want to be looking to trade. And this is a double top after the overshot. So this is a reversal pattern. But really, all that means is that you're going to get at least an hour or more of correction. And let me show you this. This correction started about a little after 11 o'clock, and it ended down here a little after 2 o'clock. So that's 3 hours of correction. That's more than enough to start a whole new trend again. So just remember that. It doesn't always lead to a reversal, but it does lead to an extended correction that usually lasts at least an hour. So keep that in mind. And this last trade right here, I liked this trade simply because of the trap. Notice how we got all this overlap. We broke out of the congestion. We snapped back just like you would think. Then it tried to go higher again, and when it ticked higher right here, that trapped a lot of longs that were looking for that next leg up. And so I had you drop a sell order right here, and then boom, it runs straight down. And that was a great place to enter. And I really thought we were probably going to make a channel about like this, but that wasn't happening. As long as you copy that line and drag it up, then then you see, hey, we overshot here, and then we tried to go lower again. But even if you didn't have this line, even if you had that line down there, which that might have been the case, I don't think so, because we went higher. But let me show you how you know what's going on. You make a new low here, and notice what this is. Notice that we got this double top right here, and we never pulled back and tested. Notice how that didn't get back there. And we almost always, just like back here, we almost always come back and test these breakout areas. And so here we go. We come back and we test it. We try to go higher. Then look what happened. We test it again. We make a double bottom. We tick lower, and it bounces. So you could have gone long right there, but again, just like down here, it's risky on that first break, because you don't know if this is going to be a breakout pullback short or not. So it's better to wait and see if you get a second entry, and then we make a higher low with all these stems down here, so going long right there, and then you're looking for at least a pull back to the trend line, and then it just keeps on going, and you're figuring we probably got to come back and retest the high because that's the first break of the trend line. So and again, it was, look at all this overlap right in here, so it was risky trying to go short. And you see what would have happened. That was a nice long trap, very similar to this. First entry long, pull back, and then a second entry long, and all it did was trap people, and it turned down. And you're so close to those lows. The trend has been up. We're looking for a possible retest. Your entry was 47.25, and it's a 4-tick failure. And when that ended as a doji, that's your clue to get out. Don't hang around, because when it, if you enter a trade and you're expecting it to take off, kind of like it did right here, and then all of a sudden you get a doji at some lows, that's not a good sign. And even though prices may tick up and turn down, or may even keep working lower, it's not worth the risk. Take what it'll give you, get your tick or two, and get out and look for another entry. And if you'd have done that, even if you'd have gone short right there and you did that, you got a chance to get back long right here without being in a short trade, worrying about whether it's going to come up here and stop you out. Just take what it'll give you and be done with it. I don't talk about this a lot, but my personal opinion is, if you trade to protect your capital even more so than adding to your capital, you won't give away a lot of your money. In other words, if you get in a trade and it doesn't do what you think it's not doing what you expected it to do, then you either misread it or the market's just not cooperating. So why risk it? Just take what it'll give you, get out, and look for another trade, because in a minute you'll get one right. And if you keep buying these trend lines, that's you're more apt to get it right. And so then you got a chance to go higher. And so it's better just to exit. And again, I'll say that one more time. It's better to trade very conserving your capital rather than trading to try to make money. I don't know if that makes sense or not. I hope I'm getting my point across. You want to make money in your trades, but if you enter a trade and it's not making you money, you want to be thinking about conserving your capital. But don't take that wrong. You can't keep your stops too close. I'm not talking about that. In other words, your stop would have been above this signal bar, and you got a nice entry. But as soon as you got that doji, you either want to go ahead and think about exiting, especially when it bounced off your exit order down here, because that's what happened. Either think about exiting or bring your stop down to break even or break even plus one, or just go ahead and close the trade and try to get out. So that's more what I'm talking about. I'm not talking about, because I know there are a lot of people that will try to enter and keep a 2 or 3 tick stop, but it's got to be somewhere logical. And you know, it really needs to be above this bar, but definitely above your signal bar, which is the trap bar right here. And you see what happened once prices broke back above that bar, they shot on off. And so protect your capital. Don't keep your stops too tight, but just make sure that if a trade doesn't do what you think it should do, and let me show you that one more time, just so everybody understands. This was it looked like we were bottoming out and going to go higher. And when it ticked higher right there on this big bullish bar, it trapped a lot of people, because you got your first entry, then you got a second, and then you got this looked like a failed second entry short, which it really is coming off here, because you got a new high right here. So you got your first move down, then your second, and people are, I was even thinking, hey, we're going to get a measured leg like this off right here. And so people, when we get this little trap here, that's a second entry short, and people are looking for that next leg. And it really looks like we're going to get it for just a few minutes, and it gets exactly 4 ticks and fails. And then it turns up. So a lot of people put their stops right here, and that's what happened. And then it shoots up real fast. It hits those stops. But don't wait on it to come back like that. If it bounces off your exit order and ends as a doji, that is not a good sign. Sometimes, yeah, if the trend had been down today, it might have been different and holding on a little bit longer. But the trend has been up, so the bias is going to be to the upside, and you're better off just to exit. So hopefully that makes sense. But we're over 20 minutes here. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. I hope you had a good trading day. Hope if you didn't, hope tomorrow is a better one, and we'll see you next time.